I follow lumber prices very closely, and things are about to get wild. So lumber prices have been mostly flat for this year. And if you look at this graph, you can clearly see that. If you zoom out, however, you can see that things have been crazy before. Well, things are about to get dicey again. So let's zoom back in and look at lumber prices for the past year. Now, the graph really doesn't look all that remarkable, but one thing to remember is that it's currently the summer building season across most of North America. And usually in March, April, and May especially, we would see a spike in prices because of higher demand due to that summer building season. But here we are in August, and what we see is the exact opposite. In fact, starting around the end of March, prices came down. Now, for all of us who buy lumber, that's a good thing. It means prices are lower, right? Well, it is good in the short term, but what we have to remember is that lumber companies are businesses, and they can only make money if they can sell their product for less than it costs to produce it. The break-even rate for most mills in North America is around $450 per thousand board feet, which is this line here. But it is important to note that the break-even rate for some mills might even be higher, and for other mills it might actually be lower. Before the pandemic, that break-even rate was much lower for everyone. But costs at mills have gone up substantially, particularly the cost of labor, energy, and logs. Now, why is that important? Well, the closer that we get to this line here, the more strain that puts on the bottom line at lumber mills. And so if there is a mill that has high costs, or one that's old and needs money for improvements or updates or new equipment, the money just isn't there, and so they end up closing. They may operate at a loss for a short time, but they'll only do that if they can see a light at the end of the tunnel, and it has to be a pretty bright light. And so the result is exactly what we have seen, which is a ton of mill closures and curtailments. Curtailments are a reduction in production in order to save money. And it's more than just the price of lumber that's creating issues as well. In some places, Canada especially, there are government regulations and government policies that are making it more difficult for lumber mills to be profitable. Some areas are seeing a lack of logs due to fires or government regulations or overlogging. And so they have to pay much more for those logs, which increases their break-even costs. And at the end of the day, what that does is it impacts the capacity of the market as a whole. Now, what does that mean? Well, these mills are just like any other factory. They have a capacity. They have a limit to what they can produce. And let's say that one mill can push through, say, 2 million board feet of lumber per year. If we close 50 mills, that is a reduction of the capacity of the market of 100 million board feet. In truth, hundreds of mills have been closed in the past few years. And that means that there's been a reduction in capacity over 1 billion board feet of lumber. That is significant. So why is that a big deal? Well, the thing is that currently demand for lumber is very low, and we're building many fewer homes in this country than we have in the past. Added to that the homes that we are building are much smaller, meaning that they're using less lumber. But that may change. There are currently millions of people in the country, mostly young people, who want to buy a house but can't because both home prices and interest rates are high. And that's making home ownership out of reach for a lot of people. The question then becomes whether things are going to stay like that or whether a change is coming. Now, the Federal Reserve has said that they plan on lowering interest rates later this year. That's because inflation is nearly down to target levels. And when rates come down, the cost of owning a home will also come down. And if the cost of owning a home goes down, all of those people sitting on the sidelines will jump into the housing market. And if builders are smart and if they can afford it, they're going to start planning to build a lot more homes now because they're going to be needed in the very near future. And what that's going to do is this is going to increase demand for lumber. And the risk is that because of that diminished capacity at the mills, they're going to struggle to keep up. But that all depends on how gradual it is. If it's slow, then the mills may be able to increase that capacity in line with demand. But if it's quick, that's when things are going to get wild. Now, generally, when they increase or decrease rates, they don't change them by more than 0.25% each time they meet. And most people think that there's probably going to be 2 rate cuts later this year. So what that means in real terms for home buyers is that the monthly payment for an average home will go down by only about $115 per month this year. Now, that's not quite enough to break the bank. But if things keep headed down their current track, there will probably be more rate cuts in the future. And a decrease in the interest rate of about 1.5% is a decrease in the monthly mortgage payment of about $340 or $4,000 per year. Now that's starting to make a difference. And if you lower it by 2%, it's even bigger. Now I look at the housing market and by extension, lumber prices as a spring. Now on one side, you've got those high mortgage rates putting pressure. And on the other side, you've got millions of people who want to buy a home. Those two forces pushing against each other are coiling this spring. And if that potential energy is let out gradually, lumber prices will go up, but not crazy like they did before. But if something else in the market changes quickly, such as a drop in home prices or a steep drop in interest rates, one or both sides of that spring will go off. And that's when things are going to get wild, and that's when lumber demand will spike without the capacity and supply to meet it, just like it did before. Now that is just one scenario, and we have to remember that markets are complicated. When rates do come down, it's just as likely that home prices will go up because of increased demand, and that means that home affordability in that scenario would probably remain unchanged, and there wouldn't be such a huge spike in lumber prices. So it really is just a time to wait and see. Will mortgage prices come down significantly? Will housing demand go up? Will home prices go up? Will the demand for lumber go up? And will lumber companies be able to meet that demand? Those are all open questions. So there are a lot of ifs out there, but I want to know what you guys think. What's next for housing and for lumber? Do you think that the housing market is poised for a comeback? Do you think that home prices are going to crash? Do you think that lumber prices are going to shoot up again? Or do you think that they're going to remain stable like we've seen over the past year or so? Leave me a comment and let me know what your thoughts are. Thanks for watching. Be sure to subscribe, be sure to like this video, and check out this video here about why they're building so many apartments, even in rural areas. And check out this video of a company that's making lumber out of hemp. It's a really interesting story. So thanks again for watching, and I'll see you in the next one.